Today on the Australian Business Show, we welcome Andrew Nash, a visionary leader at the forefront of digital transformation and technology innovation. Andrew's built his reputation by shaping businesses that not only adapt to, but drive change in the digital age. Beyond the usual leadership playbook, Andrew brings unfiltered insights into the tough choices and real risks that define success in today's rapidly evolving tech landscape. This isn't just another CEO interview, it's a deep dive into the cost, courage and clarity required to lead Australian business into the future. Hey Andrew, welcome to the show. Welcome to the Australian Business Show.
Nick, great to be here. Great to be in Australia on the Australian Business Show.
Yeah. I've been looking forward to this because, well, we only met a couple of weeks ago, but I feel like we're two old souls that have known each other for a little while.
Well, we at least grew up in the same area, right? So, It's like kind of getting back home again. It's lovely.
Yeah, and so, obviously, Australian Business Show, we're diving into a lot of around business. I found that this serves me as much as anybody else, but I get to speak to unique individuals that have done and achieved a lot in their life, and then share some of that with people out there. I think everybody's an entrepreneur lately, and that seems to be the latest thing. But actually, we were speaking a little bit earlier off camera about the realities of what being an entrepreneur really is.
Oh yeah, no, it's I thank God it's come around and it's in vogue to be an entrepreneur because I don't have to explain what it is as much anymore. My fun experience, probably about 30 or 40 years ago. In fact, I got to do the full admission and carbon date myself. But the first startup I did was 38 years ago that I sold 36 years ago, and I'm a technology entrepreneur. And in the good old days, that means I had my choice of high quality financing options here in the Australian market. Any one of the individual banks were prepared to put a second mortgage on my house. There just wasn't the technology venture backing way back then. So it was kind of hardcore and bare knuckles back then if you wanted to be an entrepreneur.
Yeah, but you also, how long since you've come back from the US? So you're in the US for how long, and how long since you've come back?
In the United States for 28 years. I can do tomato and tomato, and I'm a dual citizen, and 28 years there. Came back mid last year, so May of 2024, and there was a little bit of hope and promise for Carlton there, but didn't hold. So it's just under 30 years of my career in the US and 10 or so in Australia. Started in Australia, back in Australia again, and loving being home.
So as a dual citizen, Americans pay tax no matter where they live in the world.
Yes, it's kind of a gift that keeps on giving.
Yeah.
So you are taxed on your worldwide income, and I get the joy of filing taxes pretty much all year round. It's lovely.
Yeah. Look, Australia's horrendous in terms of the taxes that we pay, but at least we can move countries and then pay taxes in that way.
Oh yeah, that's probably the whole separate podcast. We can go down that route. Let's keep it on the happy path.
All right. So Silicon Valley, you worked Silicon Valley for a period of time. I don't know how long.
Yeah, originally so I built a tech company that was for those who are in the technologically inclined. There was a little piece of software called SAP that was coming through in the early to mid 90s, and we built probably the largest niche integrator here in Australia and globally. In fact, it was with business partners who were in Canada, Germany, and the US. And we built and sold that to Deloitte. And I then, Deloitte then asked me to go over to the US, and I moved over to the Bay Area in Foster City in Silicon Valley, and spent a little bit of time there. But for those of you who have worked extensively in the US, the West Coast is a long way from Europe. And it turned out every one of my customers were either on the East Coast or in Europe, and that was a minimum of 13 to 15 hours on a plane each week, or 24 hours depending if I'm going to Europe and back. And ultimately I moved over to the East Coast and lived on the East Coast the majority of the time I lived in the US.
When did you know that that business was an interest for you? So how did you Did you go to college, university? You're an alum.
So yeah, it's probably wow.
I know there's another episode.
Another episode here back on the therapy couch. Yeah, we can do the whole thing. Yeah, but roll back to it was. I did undergraduate Melbourne University, accounting, economics, commercial law. Then I did computer science over at what was Chisholm at the time, it's now part of Monash. And then joined Arthur Andersen, which I think they're now defunct Arthur Andersen, but an incredible group of human beings who were working at Arthur Andersen back in the, I'm going to date myself again here, back in the early to mid 80s. Just incredible people and connections. Guys like Mark Corder and Mark Mentha, who now have Corder Mentha. Just great people to work with. Ann Jackson, Simon Jones, etc. have gone on to just do incredible things here in business. So we've sort of had that deep roots.
Yep.
I was lucky enough, but to address your question, I was probably, I was lucky enough to basically be a bean counter and a nerd. So it turns out 40 years ago.
Is there a difference?
Yeah, big time. Yeah, you can see I'm the chartered accountant with all the personality, right? Yeah, that's right. It kind of comes through, right? But no, it was kind of unique at the time to actually have a combo of both business and technology skills, and I had the ability to speak fluent nerd or fluent bean counter.
Yeah.
And it was just kind of the right time as the technology industry was growing and emerging, and I pretty much took every single opportunity from there forward. Relative to that, because they were literally, it was a big digital divide. I mean, there was literally you knew about tech or you didn't know about tech back then. Now it's pervasive across every discipline and industry and similar. But yeah, no, I was lucky enough to get just some great connections and great degrees and great opportunities, and just kept running hard at it.
I'm always interested to hear, is an entrepreneur born or do they learn to become one? And in fact, on another show that we're doing at the moment on mergers and acquisitions in terms of podcasting, we were talking about this exact thing yesterday, startup versus buy, and both are a form of entrepreneur. There's no problem with that. But, I'm firmly in the camp of buy. I'm not a startup guy. I don't want to do that. I'm happy to work hard,
right.
But you can't, I love the saying, you can't steer a parked car, right? So, if I buy something that's a going concern, then I have momentum that I can do something with versus a startup. But where do you see that, and how do you read the play on that?
So a good set of analogies. I think, entrepreneurship is a continuum. It's not a did you start a company or didn't you start a company? And I think that's just crazy to have that as an individual label. I think the absolute truth in my story was I was about 3 years into my consulting and other career at Arthur Andersen. I kept sitting across the desk on the table with other people saying, "Why are you listening to me? I've never done anything. I'm literally just charging you a ridiculous amount per hour, and you're soaking it up like I actually know what I'm doing." It's like I actually have to go and sit on that side of the table. I needed to go into a startup. So mine was more curiosity. It's like, okay, I've done my background, my business degree, I'm advising business clients. Let me build the empathy. And I kidded at the time. I didn't use the word then because we didn't have burner phones back then, trust me. I am literally that old. But I now call it my burner startup. I just wanted to do a startup to see what a startup was like.
Yep.
And we built that and sold that within 2 years. And it's like, I see. So, it was everything from every single emotion from, starting with a blank sheet of paper to, what I call sleeping like a baby, which is, waking up at 2 a.m. in the morning and just screaming and crying, hoping you can make payroll, then finally selling the company and then having the amazing revisionist history story to say, hey, look at the amazing thing that we built and created and sold versus the memory of just the craziness of the things that you actually have to do to get a business off the ground. And if I learned one thing and one thing only, I have just incredible empathy for anybody who has the courage to start a business and take a shot. It's not just, in many respects, it's sometimes driven. It's like an ego-driven thing or something. It's not. It's someone's actually taken some courage, some thought, and they're going to take a shot. And I was lucky enough to learn that early. And sadly, it's kind of addictive. If you like it and you enjoy it, you might do it once or twice more.
well, again, another thing we were talking about earlier. You're a lazy soul. You don't do much, do you? You've got how many startups and businesses at the moment that you're involved with?
Well, see, this is where Nick and I need to be physically in the cone of silence because, I need to make sure this is in a non-Sonia zone. Okay, Sonia, you're not allowed to listen. I need to tune out and do whatever. Now you listen to this podcast.
Yeah, okay.
So we have to do the digital confession at home. So we used to talk about, is it 5-ish or 10-ish or whatever. But
yeah.
Effective today, I've, I probably sit on 8 to 10 boards. I'm a venture partner in 3 venture capital firms, an operating partner in a private equity firm in the US. I'm concurrently doing co-founder of 4 startups in Australia that we've started up since I came back, all in different areas and different disciplines. So, we have now what I call it's not just serial. I've gone from serial entrepreneur to serial and parallel entrepreneur. It's kind of, I can remember that math at least from school. So we're sort of, and you're seeing that a lot more now as well. If you've been an entrepreneur and you've got a particular discipline or sector, you actually start to work with a lot of other folks. And the other little piece, I've been very active at the University of Melbourne here in the Melbourne Entrepreneur Centre. I'm working with the programs there. I'm working with cohort companies for the past 7 or 8 years, even though I was in the United States and before I came back. Some of them I'm now an investor in and have worked with the early stage companies. So, there's kind of
TRAM.
Yeah, it's a TRAM program for translating research in Melbourne. There's multiple programs there. There's the Melbourne Accelerator program, the Translating Research at Melbourne. There's a number of others, Innovate Ed, PhD program. But it's exciting now because, and the reason to double down on that, we're building a cool ecosystem now versus the, what I call the cavern that was here 30 or 40 years ago. It was like, you're doing what? What's a startup look like? Versus now it's, you can't swing a cat anywhere in Collingwood, Fitzroy or Brunswick here without running into someone who's doing a startup, or you've got an incubator or an accelerator. I mean, that's kind of exciting. It's now,
I love it.
Yeah, it's exciting.
100%.
Truly.
Yeah. The old adage they used to say, well, there's very few original ideas left is rubbish.
Oh, no, I'm actually the reverse. I mean, I only wish I was, 40 years younger with the same experience I've got now. I'd be running 3 times as hard. There are, literally the older I get, the less I know. It's the only way I can summarize. It's just amazing to see the innovations that continue to come through. And now it's great. How can we accelerate them and get them out there and, frankly, pick up the megaphone and tell the world how amazing Australia is?
I love that because, the older you get, the less you know. It's one of my favourite things is, and I've worked hard on this because I find a lot of people they don't leave space for what they don't know. So it's, I know what I know, and I'm really good at that, and that's great.
Yeah.
But the inverse of that is that I've got to be careful about saying the most, but so many people don't leave space for the piece of information that they don't know. And I think that's the entrepreneurial spirit for me is curiosity. You said the word before. It's curiosity.
Yeah, and I think, we don't want to go down the whole Ted Lasso quote route, but, absolutely.
Great show.
But, I love it.
Yeah.
Cannot wait for season 4, right? But to be curious, I think that the hardest thing for myself in the past number of years was I wanted to create space to actually deliberately go into markets and technologies I had no clue about. One of the businesses I got involved in 7 years ago does curved concrete using robotic form molds, taking it all away from the design. And using low carbon form and producing concrete without cement and without steel reinforcement bars. I'm like, oh, that sounds cool. Let me figure that out. Now, am I a structural engineer? I don't think so. Did I want to learn about that and the business models associated with that? Absolutely. So giving yourself the luxury to go and learn other areas and, working with another startup here, last one, shameless plug, is Curvecrete. I'll go there. Next one, shameless plug, is Porous Lane. Also, both of these through the University of Melbourne.
Curvecrete, Porous Lane. We're going to stick that in the comments.
There we go.
Yeah.
We like that. And we love the Porous Lane guys because...
Now financial partners of the Australian Business Show.
There you go. I'm sure you can hit them up for some sort of sponsorship. I'm kidding. The mission there is an impressive one. We've taken over 20,000 tyres out of dumps and actually created crack rubber, put it with an aggregate and a binding agent, and now we're putting porous pavement, which is also good for the good for the environment, good for the climate. What does a bean counter and a nerd know about that? But for me, it was great to actually go and learn these different areas, and now we work on areas like quantum sensing on iron and ferritin tests. Again, it's if you can create the space to now learn about all these other things, I'm like, I'm looking forward to the next 20 years. It's going to be a blast.
So how do you go about creating that space? So when you're in the midst of the battle of business, it's hard to go and find that creative space, but I think it's such a critical element of success. How do you work that into your world?
So basically, I'm not a 24/7 sort of person, but I make space through carving out time to say, I've got to do at least 20 to 30% of what I do in my non-core disciplines. And that was a deliberate choice. Even when I joined the venture funds here in Australia, I wanted to work with a deep tech venture fund as a venture partner. So I actively sought one out, and we are working together versus I am working with another one, which is enterprise software and fintech, which is my 40-year career. That's easy. So said differently, it's easy to stay in your swim lane. It's hard to force yourself out of your swim lane. But if you don't carve time, you've got no hope. So I've just deliberately said I'm going to go and learn other things, even if I'm the dumbest person in the room for the next 5 years, doesn't bother me. And what I've found is that you actually learn different things and different perspectives. And this is a skill I've had, frankly, I didn't realize, but if I go back 40 years ago when I started Arthur Andersen, I would make choices like, can I go on the project down at, Lysarts, which is now part of BlueScope Steel. It was all part of BHP way back then. The real answer was it was just down the road from Point Leo, and I could go surfing in the morning before we actually started work, if I'm being really honest. But I wanted to go and see, okay, how does you take slab steel and punch out the zinc loom? That looks cool. You push that through a series of, the big 5-stand mill process and, the heat and blast furnace. I'm like, oh, that was cool. Or, when we spun part of Melbourne Water out and we needed to figure out how to open up the west, you need to cut sewage lines. And they brought in the big tunnel boring machine, which is probably the biggest one even before all the TBMs that they're now using here out of Canada. Yeah. And went down, and you went down underneath and you looked at how they did the TBM. And cool little fun fact, there's a thing called a Melbourne head that goes on the front of the TBM because as you go from soft dirt into basalt, you need to sort of not have to back up and change up the entire head, which is a costly process. So designed in Melbourne, they put diamonds and other things on the head so you could literally just keep going straight through. So I got hooked on this sort of innovation and other things a long, long time ago, but it was mostly because if you go outside your discipline and outside your swim lane, you learn so much, and then you can see both benefits and parallels, and it actually just creates a richer environment. And I'll come back to I only wish I had another 100 years because, maybe we will with, singularity and, don't even need to go to the Sonia cube on that one. It's like I'm kind of hoping we get there, but it's like it's going to need a pretty big wet lab and some really smart scientists to figure that for me. But but it's to me that's the opportunity, and I'd literally if we can condense more of it, and we're starting to do that with AI and accelerate everything. This next 10 to 20 years is actually pretty exciting.
Well, I mean, you touched on what you're talking about there is longevity and biohacking. I mean, that as an industry is exploding, but is really just scratching the surface.
Yeah, well, I think the underlying challenges, the underlying science and discovery, and then translation, still is a lengthy process. We can get smarter and faster and whatever, but we still have to go through in the US the FDA approval processes and pathways, or de novo or other pathways there, or similarly, TGA here in Australia, or we've got different processes up in Asia and in Europe. So we can't, unlike say the software industry, I can build an app this afternoon and get it in production tomorrow. For all the software nerds on the podcast, no, we can't. please. Lovable's a pretty cute tool, but you got to put a little bit of back end to this, and you might need to have some security and compliance and scalability. But yeah, it is a little bit quicker than it used to be. But yeah, my point is that in certain innovations you can get them into market relatively quickly. You can test them quickly. I can come up with an incredible biotech and biohacking technique, but it's still going to take me anywhere between 7 and 20 years to get it into the market and adopt it in clinical proof and trials and standards and
red tape,
blah blah blah, and independent of the US global environment and political environment at the moment, which we'll side skirt.
Yeah, that's probably another episode. We're up to about 4 now, I think, episodes. Just in our conversation here, we've got others now stacked up.
Oh yeah, no, it's okay. I can come back.
Yeah,
I'll just flip up, and I'll do a Canadian accent on one or American on another, and we'll just flip it up. I can go full hockey player if you want.
Can you?
Yeah, just take you into the boards and only kidding.
Yeah. You've been in, I think you told me you've been involved with a lot of exits. I think totaling over $10 billion in exits.
Yeah, this is an area that I told Nick and others. I don't sort of like keep count or humble brag or whatever. But look, I've been just lucky. If you've been in the tech industry,
we've had a conversation.
About luck. He's going to give me the whole lucky spiel again. Yeah. But the fun part was, if you're in the tech industry, you are either going to. There's only 3 outcomes, and they happen really quickly. It's a rocket ship. It frankly blows up and dies quickly, or it's The Walking Dead, or it's just a flat, boring sort of a business. So it's one of those industries that you will see on average a lot of exits, but they don't report all the failures as well, which is a significantly greater number. And equally, in a lot of the exits, you just basically got out with your shirt and. You didn't end up with the lawsuit and everything was all good, and you kind of gave somebody the keys and moved on. And that's also an exit. So I think the thing that I always preface this to say is, not everything is a sort of a Google or a Facebook or a Apple or a whatever type scenario. Independent of that, I did get lucky to sit in across a whole bunch, and it was triggered a while ago. Someone asked me how many exits. I'm like, I don't know, I don't count. And then I'm like, all right. So I have this weird definition where I sort of say either, I started it and I sold it, or I co-founded it, or I just was one of the senior execs with a bunch of buddies, and all the way through into I was a operating partner in a private equity firm. Turns out that's 18 exits and over $10 billion in exits, and we've had some great ones too. Just frankly some incredible ones. I've been blessed to work with just some incredible friends. In particular, we built the first real-time web analytics system in 2000 that we sold that one twice, so I get 2 on the exit score on that one. We built the company, sold it to a company called Website Story. And funnily enough, we actually did web analytics as well as call center analytics, and we were doing little call centers. You might know, a little telephone company in the US called Verizon, folks like that. And we sold that to Website Story, and we had a conversation with Jeff at the time, who was the CEO, and said, we do web and call. We can't really be called Website Story anymore. So the company was called Visual Sciences. We then flipped the public company name of Website Story to be Visual Sciences. So we sold that again a year later to Omniture. And so we called that, that was a really nice double flip. And the reason for this story, it was kind of an interesting one, because when we did that, we kind of got really irked that the databases underneath Visual Sciences, Oracle or Microsoft or somebody else wanted just a ridiculous amount of money for us to store the data, because for those of the nerds who are listening to this, the big difference between small amounts of data and massive amounts of data is that we had to store it all and really create these, big longitudinal database to study. And these were properties, the customers we were doing like Marriott and Capital One and some of these huge brands in the US. Well, long story short, we got bored with databases, and the original engineers then started a second company after we had that exit, which also exited 6 or 7 years later, that we went after a second problem. And the second problem was, as NoSQL databases were coming through, they were pretty cool for big scalable databases. But everybody said, you had to make compromise. And, if you go back, anybody wants to go and sort of nerd check or go to Reddit and go figure all this out. There was a thing called the CAP theorem that Werner Vogels, who was the CTO at Amazon at the time, said, basically you can do scalable databases, but there's this interesting challenge where you have to make compromises if you do it with NoSQL technologies. You can only have two of consistency, availability, and partition tolerance. And it was called the CAP theorem. And we said, pay attention to the word theorem. It's just a theory. So 6 years later, we broke the CAP theorem. We built a technology called Foundation DB. We built and sold that to Apple. Foundation DB now sits underneath things like Snowflake, Tigris, and other technologies worldwide. So in both of those instances, there was kind of a dogged determination and first of all, some exceptionally smart individuals, and I'll give full credit to them here, David Rosenthal and David Shearer, who are just ninja level geniuses and just incredible. But there was this, you can't do real-time analytics, it's too much data. I'm like, hold my beer, right? Let's get that done, right? Then it was like, no, you can't do SQL and NoSQL, and you couldn't build a database that you could go and compete with Oracle and IBM. I'm like, hold my beer again. Yeah. And to give full credit to the guys, I'm not working with them now, but they're now doing their third startup, which is even bigger and even cooler, called Antithesis. Essentially what it was when we did Foundation DB, the only way to test a massive scale database was to create a synthetic testing engine that could synthetically replicate the internet and everything that could go wrong in the internet. So ultimately they've now created a synthetic testing engine called Antithesis, which can look at bugs. And I think the first valuation round, I might get this wrong, I think they raised money at about a $240 million valuation on the first round. Now, the reason for the story is not that I'm a smart guy. It was just lucky enough to work with just some amazing people, and they became, sort of friends and connections, and we've done all sorts of other things with those branches of the trees along the way. So if you kind of hang with that group of people and you do those things over time, you get a bunch of exits. And another one, Jim, who was the original CEO on Visual Sciences, we went over and worked with Michael Rubin at GSI Commerce just before that got acquired by eBay. Mm-hmm. So it is literally sort of the friends, the connections, the networks. And the reason sort of agonizing this point and story, that's starting to happen in Australia now. We're putting together the ecosystems, the connections. We're getting our global legs and our global strengths. And Australia's going to be on the map as a result of that as well. But it takes years, 10 years, 15 years, 20 years. And then probably the other one I'll probably rabbit on a little bit too long. We had a fun one recently in a private equity firm where we were looking at technology to actually hack iPhones and Android devices for the law enforcement intelligence communities. So I think
scary.
I think if you recall the press a while ago when that iPhone was hacked in California, might have been us. Might have been us. So it's an incredible little company out of Atlanta called Grayshift. We invested there at the private equity firm. It was acquired by Thoma Bravo, one of the largest private equity firms in the world. And that company is now, I can't disclose all the numbers, but it's, think 30 to 40 times the amount of revenue now than when we invested, 4 or 5 years ago. And is a global leader in that particular space. But that came about just because I was working in the law enforcement community in the US, and the deal came across the desk and we looked at it and said, oh, hang on, I can probably call up 2 or 3 of the commissioners, because I was serving 4,500 law enforcement agencies. And we did the diligence that way, and they said, oh yeah, we're going to buy a lot of this stuff. So the story is, it's all about business connections, and the beauty in somewhere like the US, the scale is enormous, the connections are enormous, and and I think in Australia now we're starting to connect with that global ecosystem a lot better than we used to.
You touched on so many things there that I want to dive into, including failure, relationships. Let's start with failure. One, how do you view failure, and what's one of the biggest mistakes that you ever made? And what did it cost you? What did you learn?
Yeah, I needed to wear 2 hats here. I need to put my Australian hat on for failure, and I need to put my American hat on for failure. Let me do the easy one first, which is the American hat. We don't care.
Yeah.
We'll just, dust yourself down, knock off the dirt, get back on the horse, go again. You know, it's less of a stigma and more of a, okay, it didn't work. Australia's, there's still, the overhang of things like director's liability or, if I fail once, now it's a very small community. I joke Melbourne is like 2 to 3 degrees of separation versus 6 degrees of separation everywhere else in the world, right? Yep. So, people will probably be able to tell me the failure that I had 28 years ago or 32 years ago, and they'll remember that, where I'm like, oh, yeah, did I? Yeah, okay, probably happened. Now, I've learned, if I put my American persona back on again, which is the majority of my business career, it's not a badge of honor. It's you learn all of your best lessons through failure. And the story I'll tell you, which was kind of a weird one for me, was I left a very large software company that was probably doing about $1 billion in revenue worldwide back in the 2000 type time frame, which meant it was top 20 in the world, and I was running about 400 million worldwide. And I like every other executive around there, and got pulled sideways into the internet bubble, right? Mm-hmm. You've got to come sideways, and this is, all this new wealth is going to be created. And so in that 99, 2000 period, I joke with everybody, I actually walked away with a 1-1 draw. I literally built one, sold one, built one, shut one. Right. And the one that we had to shut, which was a failure, absolute failure, that one really hurt because it was the big idea. We got it from $0 to $4 million in revenue in 6 months. We raised about $10 million in venture capital. I can embarrassingly say I was named Northern Virginia Startup CEO of the Year, and it crashed and burned. But it was an interesting path on failure, and I learned a lot from that as well, which was we were starting to see that the bubble was starting to burst, and I was going and talking to all the venture capitalists, and I'm like, wow, I'm getting a death stare. I'm just 1,000-yard stare on the other side of the table. I'm like, I literally could have solved world peace, and I'm not getting financed. And I literally went back to our investors, and I said, I think we got a problem across the portfolio companies. No, keep pitching. And anyway, as it turned out, it was a challenge. We had 2 or 3 inbound acquisition opportunities. First one came through, very, very large global software company. It fell apart. Second one came through, it fell apart. Third one, it's like, okay, this is one of my very good friends, and we've known each other 30, 35 years. He was running a public company. They were like, yeah, this is a great little tuck-in. We want that team. We've got the deal structured and almost already done. Goldman Sachs was advising them and said, no, we have to advise you against that transaction. And you can't do it because it'll be an EBITDA hit at the end of the quarter. So you can imagine someone who's been a friend of yours for 30, 35 years or whatever, calling you up and saying, we can't do the deal. And I'm like, okay, fine, we can't do the deal. Now, I'm still an angel investor in his third startup now, and we're still wonderful friends, and it's all good. But you learn that, we've discussed this word before, optionality. So the thing I learned in failure was you've got to have 1, 2, 3, 4 or 5 other options, especially in something as volatile as a technology business that's growing. It's never can be, we're just going to do this and we're going to sell it. It's like, no, we need to figure out the partnerships. We need to start to partner with people who might acquire us. We need to have a plan B. But I think the one that caught me off guard very quickly was how quickly that bubble turned. And I sort of tried to double down with hubris and say, don't worry, we're going to make it. The other ones who had dogfood.com weren't going to make it because we're okay. We had big customers like GE, and well, it turns out all the GEs of the world then shut down all of those .com-ish type projects. So you were basically DOA. And it was like, oh, God, I just didn't see how quick that trend is. So I'm sitting sort of cautiously watching the whole AI thing happen at the moment. I'm like, ooh.
I was going to ask you, so given that you came through that, what similarities are you seeing with this AI boom?
So first of all, I think the whole AI shift is seismic, and it is incredible. But if you've been through 7 or 8 technology cycles, you know that there's 2 or 3 trends that come through. The very first thing is what's the innate innovation, and I think saying that AI is an innovation is kind of comical in many respects because it's actually the concatenation of a lot of other technology. AI has been around for 30 or 40 years. What we're really talking about now is the scale. and the scale of compute and technologies like NVIDIA, and as we're getting into the new chipsets like the TPUs and NPUs, not just GPUs and CPUs, we've now got the technology, the scale, everything to be able to breathe life into AI. So that's the first big thing that's happened. So whenever a big technology shift comes through, you've got to sort of break it down and bifurcate it, or just get into what are the elements here. What's the platform? What's the structure? What are the applications? And I think we're going to be moving now into what are the applications of AI now, and then what are the societal issues that we've got to address to get this adopted? How do we deal with the privacy? How do I not use the example of take my new innovation, just stick it into ChatGPT or Anthropic, and now it's on the web for everybody to see. Congratulations, it's not new. It's not protected anymore. So there's a lot of things to think through. And with that, you've got compute, you've got platform, you've got agentic AI, you've got AI at the edge, AI and ML at the edge. You've got the apps, you've got the industry vertical capabilities. And I think you're going to see some of the most innovative things that we haven't even begun to think about yet, because you can do it at scale now.
And at pace.
And the pace as well is staggering. We've had startups here in Australia go from $0 to $10 million in revenue almost overnight, in very simple agentic AI applications as well, which is fabulous. So it's not going away anytime soon, but it's easy to put a label of a bubble. But there are things that are going to make it and things that are not going to make it. Just putting AI in your business plan doesn't mean you're going to be successful, right?
Yeah. But nevertheless, you need to. Right, so
said differently. Don't have a plan that doesn't have AI in it.
Yeah.
So it's kind of
it's the execution and the
implementation. That's conflicting advice, isn't it?
Yeah, that's right. Yeah.
I think I just triggered that. I think you've just got to be very thoughtful.
Yeah.
I think my favourite one is where someone's just we are just going to AI enable our app.
What does that mean?
Yeah, what does that mean?
Yeah.
Like, what piece of that, or what's the value? What's the value prop? And technologically, the way to think about it is, what gives a customer a 10x benefit, not a 2% or 3% extra benefit.
So this is the thing I'm seeing with all of the AI consultants and all of the AI implementers and all of that they know probably 5 or 10% more than you, which feels like a lot to somebody.
Oh, sure.
But they're actually not delivering much. The research that I've done, I'm sure there's some good ones out there, but it's like everybody these days is a coach or a mentor. Yeah. It's the latest thing, and now the latest bandwagon to make a quick buck is to be an AI implementer, and I'm not seeing it done well yet.
Well, I'd say differently, which is you can't expect it to be done well yet because it's not finished. It's not fully baked. We haven't figured out. We're pretty excited in the past 12 months about this whole concept of MCP. And MCP is just model control protocol, which is a different type of API that's required for models to talk to each other. Because it turns out you're passing a lot of data between the model and the app. And you kind of need to give it context, because if you basically send some data over and says, I'm sending over brown tubes. Great, I can do AI on brown tubes. Well, I'm sorry, was that steel tubes, or was that some metadata that you wrapped around tree trunks in a forestry application? So there's a lot of sort of language and metadata and application interoperability that's going to get resolved. And so the technology is not fully baked at the moment. We're literally building cakes at the moment, and we're figuring out the ingredients on the fly and swapping them in and out, and we're probably going to evolve to different types of cakes, if I could use a really bad analogy. But it's not fully baked yet, and I think the best innovations are probably yet to come.
I would agree with you. The only thing I would add to that is that the opportunity in these early stages, if you can unlock some of that within your own world, be that personally or through business or investment, you have an opportunity to get a jump.
I'll give you one simple example, and I love these guys. I'm really apologise in advance for the shameless plugs, but I love a guy here locally.
We've got another financial supporter. It's fantastic.
Yeah, I was going to say, James, sorry, man, I'm going to cost you another sponsorship. But James was like an English teacher at Carey here in Melbourne.
Yep.
And he decided that he wanted to put together AI to actually help teachers mark English papers.
Yep.
Right? Because if you're a teacher at high school or similar, or at a college, you've got how much of your weekend is spent marking papers when you'd rather be walking your dog down at, near the St Kilda Pier or actually having a life.
Yeah.
So he's actually built a platform to actually get all the marking of the papers, ingesting handwritten papers, doing the handwriting conversion, running it through AI and ML engines, putting it through the rubrics, putting it through the benchmarking and reading levels to see whether someone's at its reading and writing levels, and then actually marking, grading, benchmarking all the papers and getting it all done within about half an hour to an hour. Mm. Now, I look at that and say, God bless James for doing that, and if he's used that to actually help every single teacher have a life and spend more time with their friends and family and walking their, I was going to say pet of choice, I might go dog or cat because that's a whole another podcast. If we want to go spaces and tabs for the nerds and doing coding as well, that's another podcast. I think we covered that one on Silicon Valley. But to me, those are the great little apps, and not everything is going to be Anthropic or Gemini or ChatGPT that's going to change the world. It's these simple little apps and capabilities that really transforms people's lives, because at the end of the day, that's not going to mean there's any less teachers or more teachers or whatever. It just means that teachers are actually more enriched and actually have a life, and they're probably not exhausted when they get in Monday morning to go at it again. And love technology like that.
Yeah, 100%.
Okay, let me re-summarize failure.
So
failed
America,
4 or 5
we spoke about
times.
America, and then Australia. So there's this distinct difference between the two and how failure is viewed.
Failure in Australia is still a tough one. It's still, there are legal consequences of failure in Australia. There are way less
that America doesn't have.
Absolutely. Yeah, absolutely.
Is this the limited liability?
You are not personally liable in the US unless it's fraud or a bunch of other things in particular.
Interesting.
You can literally, the company can go out of business, and that's it. There is Chapter 7, there's Chapter 11, there's other things. If you were fraudulent, you've got, there's some backlash, but there's not. Yeah. There is not the director's liability that you have here in Australia, that you are personally liable from a certain point forward for trading insolvent. Yeah. That just doesn't exist in the US. And the US is actually, as a result of that, you can also then restructure, restart a company pretty much overnight. And it's a lot easier to do there than if you have to go through that entire process here. I had to transform one of the companies that I'm currently doing a startup. We had an incredible piece of technology. It was hardware driven. It was being sold into the education and school systems here. Guess what? Through COVID, we could no longer do a demo. And then we could no longer get a chip anywhere in the world because the whole supply chains for chips just dried up. Well, we had to literally bury and put that company through involuntary liquidation here in Australia and sort of take it through the involuntary process. And then we had to do a restart and a 2.0 with that company. In the US, that would have cost me about 2 weeks and about $100,000 less. And so there's a velocity thing in innovation as well. This is why you've got the velocity in the US. It's not just the capital and the ecosystems and the talent. There's a whole bunch of other things that need, frankly, structural and legal reform here in Australia if we're going to play on a world stage.
We don't celebrate innovation. We don't encourage innovation. I've just written a book, as you know, on this very point.
Good book, by the way, Without Sucking Up.
Thank you. Another plug, shameless plug, but we'll take that one too.
Yeah, take it.
So Code Blue to Code Breakthrough, get it now on Amazon. It's an ebook, it's an easy read, but 30 years in healthcare, and that point that you just made about innovation in Australia is one of the things that frustrates me incredibly about our industry, and industry more broadly in Australia. I look at the way we write budgets, and I don't know if I talk about this in the book. I don't think I did, but it triggered me, and it took me all of probably 20 years to sort of go to put the pieces together and say, well, hang on, I'm going to call this out. But procurement practices in Australia, the way we write budgets, the way we fear failure, the way we crucify people for failure by trying to innovate in Australia stifles it. And we have this backward system that just doesn't work. But the story was, I was in sales we were selling devices for pressure care and things like that. And I had a meeting with a unit manager in intensive care, and she sort of stopped me mid-pitch, I guess, and and said, look, Nick, I get it. And I'm with you. I agree. Yeah. We should have these, but I have two budgets. One budget is to deal with the injuries I know I'm going to get.
Right.
The other budget is to buy equipment. Mm-hmm. I don't have enough to buy the equipment, but I've got plenty to deal with the injuries I'm going to get. And I'm like, what do I say to that?
Yeah, and it's so the innovation paradox is Australia is actually one of the most amazing innovators on a global basis, but we're way behind on R&D dollars and dollar spend. We're below nearly all OECD countries. We're down in the 1.6% of GDP. Top players in the world are countries like Israel, which are at 6%. So we actually have innovation. We don't have enough of it. Incredible innovations. A little thing called wireless technology.
Came from Australia.
Came from Australia. Yeah, we got the Cochlear, Australia. We got the flight recorder. And I'm like, just literally, can you do the rest of the plane? Anyway, right. But we've got this incredible innovation. I think the gap that we're seeing is actually commercialization. Mm-hmm. The funding, the ability to pull that innovation through and do all that. We don't have enough. Said differently, we're building all these incredible on-ramps onto freeways, and we've got no freeways. So great starting point to get the innovation going. Great university, great support systems. There's over $14 billion that flows down from federal in grants and other ways to really get the innovation going. But you've got to mobilize the innovation, get it into get it into global markets. And I think you are hitting on one key issue. It's just the risk. Do I personally take the risk? Given the director's liability, other sort of fear, and then, even just the cultural. If I swing and miss here and I'm 45 years old and I've only got X number of years, and is it going to impact my super fund? And there are life decisions there as well. It isn't just I'm building an idea in the garage and I'm going to be the next Google. These are, shout out again to my buddy James, who's making life better for teachers. I'm like, you go, James. Yeah. Love that, buddy.
And we love your support, James. I appreciate it. So the innovation for me is paramount for us to move forward. AI is innovation, or what we're now doing with AI, and we spoke a bit about that. But we don't encourage it in Australia, and I mean we could flog that horse forever. It's going to be a slow change for the very it's inherent in the problem.
So the only big beg I would have for anybody who reads this podcast is, we need a sovereign AI. We need a sovereign AI strategy. Yeah. We've had every one of these that have come through. We figured out how to actually goose infrastructure and really help Macquarie and become the world's leader in infrastructure and infrastructure investing. Let's just make that same level of commitment to sovereign AI and making sure that we are going to be the new innovation and technology economy, and actually invest and get right behind that. That's meaningful for us.
So given you're involved in businesses, and a lot of them, if you were to design a company and run entirely by machines now, with which leadership roles would you retain for human beings?
First of all, there will always be humans in the loop. Okay, I think independent of whether you watch WALL-E or not, and everybody's floating around up on that big spaceship in the sky and saying that it's all over. It's not. It isn't going to be machines. I think the new skill is actually multi-skilled executives who are very strong on still leading by example, exceptionally strong on, frankly, empathy and understanding, because we're going through such an incredible transition now, and it'll be over the next 10 or 15 years. So the smartest folks are going to be the people who can live that duality of living with the machines and AI and the humans and the transform that we're going through, and knowing what that means to our work. So the leadership style is not going to be top-down and autocratic at all. It's going to be distributed. It's going to be empathetic. It's going to be essentially empowering the teams more, because the tools that are coming through quicker than we can even absorb them. So let's figure out how we can embrace them and enable them, not just embrace them fully on day one, but actually train up and develop our teams and say, frankly, my teams, I need to be redundant in months, not years. So succession plans are going to change. God bless the guys who are trying to figure out the multi-generation family offices. When we've got the bots coming through as well, right?
Yeah, I had this conversation. Actually, I think it might have even been here. We were talking about AI and social interaction, and whether it's yes, you probably can't. Maybe one day we will replace the warm hands of a real person, but if it's somebody on the other side of a screen that looks and sounds and speaks and reacts like a real person, what the eyes see. Then the brain believes, and it's like, well, that's you could conceivably develop a relationship.
It's happening now.
Yeah.
In fact, one of my favorite examples in one of the portfolio companies is we have the founder and CEO who's developed an AI character from Bridgerton to talk to him about particular ideas and topics and do research while he's driving in the car. I think that's okay. People are like, oh, that's spooky or that's weird. It's like, nope. No, it's another set of tooling that's available for us.
It's augmentation, right?
It's just augmentating. It's augmentation of process or life or whatever. So I think that's probably the hardest thing for us as humans to get used to. And we've seen a little bit of taste of this. Everybody talked about virtual reality and how it was going to change the world. Except for about 30 or 40% of people have motion sickness the minute they put the VR headset on, and the brain can't process as quick as the frame rates. Okay, you've got to solve for that scientifically, and you probably can over time. It's great for gaming, not so great for other things. So this is, again, we're going to learn, we're going to evolve, we're going to adapt. I'm very excited about what's going to happen in the next 10 to 20 years.
Yeah. Well, the Apple Vision hasn't really taken off, has it?
No, actually, I think one of the big promises was virtual reality and what it was going to do. I mean, the stuff is fabulous. I've worked in that sector and that segment as well with doing some very cool stuff in LA. But out of every technology phase, great new technologies comes and frankly takes us to the next level as well. Coming back to your leadership style, though, you better be adaptable, flexible, and curious, though. If you haven't got those skills, you're not going to be a leader in the next 10 or 20 years. Emotional intelligence is going to be very, very important.
Yeah.
And I think you're going to see a whole lot more technology to support that as well, not just a HR system.
Yeah, psychology.
Psychology is becoming very important, understanding things like cognitive and mental load. Cognitive load in particular, we are more overloaded than we are ever been as humans, and it's not going to get any easier now with AI because guess what? I can get up at 4 a.m. and have a proposal out the door by 6 a.m. because I can do that with Anthropic and a couple of other things that I can do, and I may or may not have done that yesterday.
And we cram that, I'm sure so it creates time, sure, but we cram other things into that time.
So this is one of the things people talk about, the productivity opportunity, and it's like, just be aware that what we're doing now is we're actually going to do double or triples in the same hours that we had using this sort of capability and tooling. That's not all good. It is, in many respects, good for productivity, but it means we're going to be doing a whole lot more. And if I had a scale of 0 to 10 on a cognitive load scale, as we've gone from the 60s and 70s and then into the 90s and heading into the aughts, we were going from 2s and 3s and 4s and 5s. We're heading up into 7s, 8s and 9s now that we're doing all of these different things and is always on. And I used to say to my clients and partners, just connect me on any digital channel. And now that's like, oh my God, really, on Teams or on Slack or on WhatsApp or on Telegram or it's like, okay, let me. And they're like, oh, I sent you a message. I'm like, okay, which one of the 17 digital channels? Yeah, because if I pulled up my phone, it's like, okay, I only have 16 Slack instances and I don't check them all every minute.
There's a new business for us.
I'm with you.
Yeah,
I'm with you. An
aggregator for that.
Yep, and just pipe it to me while I'm surfing down the beach, exactly, and just get it to my earbuds.
Earbuds or your meta
I can just double tap again and say, you're right, ignore most of those puppies because I got a 6-footer coming up.
Exactly right.
See ya. Andrew doesn't need to drown.
Thank you very much. So look, let's finish on this one then. In speaking to the younger entrepreneurs that are coming through, and I think I don't even know what the latest generation is. I know millennials get a really bad rap, sometimes incredibly justified, but there's also some incredible people that are coming through in these generations. And so, in speaking to that, what advice would you give your 25-year-old self? And I'm not talking about the usual cliches and things, but something that would be brutally honest about evolving the intersection of technology and business and life.
Yeah, so I think we've discussed this before, is the single piece of advice I give everybody is get a posse. Just get a posse. Get a group of people who can just help you. I tried to do too much on my own and try to figure it out, and there's a lot of just exceptionally smart folks. I mean, the most joy I have at the moment is probably the 20 or 30 startups I'm involved with in some shape or form, with anybody who's 21 years old to 35 years old, and they've come up with an amazing new idea. And I'm like, oh my God, how do they have the energy for that? But let me help you with, distribution channel or connection or something. So finding your posse and team, and I usually say to folks, it's about 3 to 5 core people.
Yeah.
They're not just your friends. These are people who can help you with, capital, financing, connections, or, if you're, a little bit of coaching sometimes as well. And I think the other one I really love is get yourself the equivalent. If you've seen all the big tournaments like Wimbledon and so, they get on and thank everybody. Almost everybody thanks their sports psychologist.
Yeah.
Now.
Yeah.
That never happened.
Yeah.
Now it's kind of okay to have a psychologist. Think of having someone who's really going to help you go through this environment if you're doing a startup and working you through. And having someone, not just coach. Coach is the wrong word. I actually call this, more the psychologist, because on a good day, it's awesome. On a bad day, it's horrible. And that's usually sometimes between about 7 a.m. and 9:30. And you'll actually have multiple good days and bad days in the one day. It's a whole lot more pressure, and just having someone saying, hey, it's okay, don't worry, keep going. That doesn't matter. So build your posse, put your team together is probably the most important piece. And the other thing is just worry less. It's either going to happen or not happen, and you can't force it.
Yeah, I love that. Thank you. And I think, so you're in my posse now, right?
We posse. We had a fabulous lunch the other week, and I'm conscripted.
We're possied up.
Yeah, I got the saddle, man. We're ready to ride.
Good stuff.
We are ready to ride.
Amazing. Thank you. I love your energy. Your incredible success.
Thank you.
I've developed a real fondness for you in a very short period of time, and I'm excited about what we're going to do together in the future.
Oh, I know. We're going to have some fun.
Absolutely. Good on you. Thanks, Andrew.
Thanks, Nick.
Cheers, mate.
Thank you.
If you enjoyed this episode, be sure to subscribe and leave a review. Share it with others who are passionate about healthcare and business. Stay tuned for more incredible stories and insights in our next episode. Until then, keep pushing boundaries.
Thanks for tuning into the Australian Business Show. If you found value in today's episode, be sure to rate and review us on your favourite podcast platform. Hit that subscribe button and stay connected with us for more groundbreaking stories, actionable insights, and game-changing tactics designed to fuel your business growth.